Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. So we're coming to really interesting few weeks. It's just because you probably heard already that the preliminary agreement is achieved on the debt sale. So it was announced in the Bloomberg. So you could find the article. If you can't find it, just visit our Telegram channel. I have put the link there if you would like to read it. So initially I thought to prepare some, general report on the gold market, what could be in the short term and long term, what different scenarios of the debt sale and so on. But the recent news have brought some adjustment, and we decided to focus purely and directly on the result of this achievement. And there's a lot of really tricks around it for the gold market in particular, because we think that the debt saga is not over yet. So the preliminary agreement is not yet the final agreement. It's not the same, because now McCarthy will have to push it through the Congress and through the Senate, and its booing already is coming. And some Republicans already have said that they are not agree with this statement, since it's very small majority in the Congress of the Republicans, and the Senate is controlled by the Democrats. I foresee really big fight, because everybody would like to get some, benefit, and every senator or congressman will try to get his own points from the discussion of this project. And this really tells that it's nothing over yet, and it easily could be lasted until the beginning of the June, this discussion in Congress and Senate and so on. So this is only the half of the story. We put some details in the report as usual. The second part, we are focused on the results of this agreement for gold market. Particularly speaking, we mostly focused on the short-term reaction and keep the long-term discussion for the next report, just to not overload the report with the details. So we think that it's appeared really quite interesting to read. I hope you will get some enjoy with it. Speaking shortly, we foresee really bumpy time for the gold market in the nearest few weeks probably. Because the achievement of the agreement, it makes some clearly bearish factor, not only for the gold, but for the stock market, for the cryptocurrencies, and for everybody except maybe the United States dollar. That's why, to be honest, guys, I do not see really big use to consider some technical picture, because I am sure that on Tuesday it will be quite different picture. Just because on Monday we will have the Memorial Days, this gold market will be closed. In particular, on Monday, it should be reported the details of the agreement. So we will see what particular points they have agreed with. So still, let's take a look what we have on the Friday evening. Market still stands around 1940. We do not have any surprising action on the daily chart. Trend stands bearish. Market is not at oversold. Using this most recent swing, we could get additional support levels. So here is 1940 and 1949 is also hidden support level by the Jordan Napoli. It's basing on the gap reaction point. This is not typical fib level. So the market stands around it. Next will be 19 even approximately. That's what we have on the daily chart. But on the 4-hour time frame chart, we also have untouched XOP target. It's 1922. This probably will be achieved. So if you hold bearish positions that we have discussed through the week based on the breakout of this triangle, if you remember previously we talked about 1985 possible taking position levels around confluence, placing stop above 2000. So if you still have shorts, you probably could keep it. It's because it could become the lucky time for you. So market probably will show the gap down on the opening on Tuesday. So besides, you can see with these bearish grabbers that have been formed on Friday, it also suggests taking out of these lows, which means, well, direct action to the XOPs 1922. So let's point the XOP as the minimum target that market could achieve in euros time. But I'm afraid that, or maybe not afraid, that we could get it right in the gap opening on Monday, or on Tuesday, sorry. So that's why I'm not taking a look at the hourly chart. It's just because, first of all, we don't have something interesting there. And second, which is more important, that I do not see any reason for that, because, well, 100% that on Tuesday morning we will have absolutely different picture, and hourly analysis of the hourly chart will bring no actually fruits. It's useless right now. So I'm not really will be surprised that we will have to increase the scale and take a look directly on the weekly daily performance just to estimate the targets, possible swings, because volatility on the gold market could be really significant on the background of achievement of the debt sale. So really will be reshaping the whole market. Just a lot of assets involved there. There's treasury yields, CDS spreads. It was actively traded. People buying the insurance from the default. United States dollar, which also will start moving actively just because of the rebalancing of the portfolios and just reshaping overall structure of the portfolios. So was probably changed in the nearest few weeks, and lots of stuff. So be prepared, guys, for the bumpy ride, and mostly I suspect that this will be bearish for the gold. Well, at least in the nearest maybe couple of weeks, until the Fed meeting, probably, definitely, and then we will see what will happen.